Hey everybody, all right, let's just go over the market. We'll take a look at the NASDAQ, which is this wave chart here, and below that the S&P wave chart, and above that is the SPY. So just below that, I have a indicator which I built. It's really good. When I first take a look at this, I'm basically you look at levels and all that, but I need to catch the turn. So in order to do that, I'm taking a look at the NASDAQ and S&P over here. And over here, what you notice is the market. This is interesting. Then with the NASDAQ over here, it basically did a stop run right there. That high volume came when it went above here and then puked. So what do you call this? You could call it a shakeout. You could call it an upthrust. You could call it a stop run. You could call it a fake out. You could call it a false breakout. Whatever it is, it's a high volume maneuver that went up in order to go down. So this is how one example of high volume, how it reveals itself. It's like a false move. I'll show you one in the SPY, but it's not. That's not really a false move. It just took out the low before it reversed. Right here, it took out. This was the. Over here, then it did a spring and then it went up. So I mean, sometimes that happens. So you have to be very careful if you're going to try to buy pullback, especially in downtrends, because this type of behavior, a change of behavior followed by a spring and then markup, which is usually just short covering or testing or whatever. This happens in downtrends. It happens a lot in downtrends. So spring after the change of behavior is notorious in downtrends, and same thing with strong uptrends. You have a change of behavior followed by an upthrust and then markdown. So you just have to know that. So the first point here, change of behavior, then you have a spring, and then you have markup. So it's very important to understand why this is occurring. This is going to happen in downtrends when there's a reversal, and typically when there's a pullback, bear pullback on a higher time frame, it will look like this on a lower time frame. Anyway, so what were some indications? So right here, the high volume, what is the meaning of this? This is, you just call it an upthrust or a shakeout. I don't really try to get too much in the terms, but I understand the point. The point is rip and dip. The same thing here. Right? Right there, takes out the low. And this right here, you call it a spring. Spring of the low, you could also call it effort reward, you could also call it a climax. It actually has all those characteristics. Right? Wyckoff liked to use the word climax a lot if you see his study. So he would have called climax and then reversal, climax and test, and then climax and downside, and blah, blah, blah. He would use the word climax for high volume ending action. So that's what he did. I haven't seen him talk too much about effort reward as much as climaxes, at least not in his first study. The idea is the same. Like, he would see a lot of volume, and whether there was reward or not, I think he would call it a climax, especially just when he's just looking at volume. And anyway, so what was the clue on the NASDAQ side that a move was going to end? We had those ending action, and it was this. There's only two. I'm not sure, but I don't know if I'm saying this correctly. But high volume is either continuation or ending action. Continuation is the breakout. and ending action is the climax, right? You could also consider high volume to be the change of behavior, right? So one may say this right here is your change of behavior, right? Right there. So basically, when you look at high volume, there is a couple of things that should come to mind. One, immediately think of the possibility of climax. If you're in a downtrend and you have it, you can consider the possibility of a change of behavior, right? So how do you connect them? Well, change of behavior starts the trend, climax ends the trend. It's the starting point, and the ending point. One to end, one to start. One to start, one to end. The other way you view it is effort reward. It's a lot of effort, but no reward. Anyway, so that's the way you view it. On the SPY, you got it going down, 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 down. And right here, if you could just wait for that. We have a lot of effort, no reward, one little tip, and then it goes blue, which means what? It turned. That is your confirmation to get in the pullback. That's it. So over here, you had market going down. You had a lot of effort here. It's not really a lot, but if you compare it, like over here, there's 44. Look at the angle of this and the distance this covered. Then look at the angle and distance of that. And if you compare 44 with the amount of progress to 53 with the amount of progress, it is a no-brainer that this is effort. Then it goes up, down, and break. Now you take the longs in my book, especially after this high volume up move. What does that mean? It means let me see, volume came here. Nah, it means that it's working. That's what it means. This is just even more confirmation because, as you know, markets, they go down a heavy volume, then they reverse up on heavy volume, and what is that? That means typically climactic behavior followed by a change of behavior. So that's what's happening. This high volume up is confirming you take any pullback after that. So even if it's just a strong wave, right? Look at this, the pulse here of the market, boom, right there. There's no question. No question. In a downtrend, ding, 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 boom, especially with that background, there's no question. This is the biggest in 8 waves in terms of volume. The demand just came in. So every pullback, right now the pullbacks are by. So the left-hand side here is the effort reward. The delimiter here is between the delimiter between the left and the right is this. The right-hand side is this, and it goes higher. Remember this, that I've explained in the prior videos, right? How do markets end? They either end here with a climax, with a lack of demand or lack of supply, or on effort. Those are the 3 ways markets end. And when I say effort, some folks, from a time perspective, it's the same thing as dullness. So when I say dullness, let's say the market goes up in 15 minutes and does 15 points. Now the market, when it pulls back on 30 minutes and does only 10 points. That move down has a lot of dullness. Why? It took a lot of time and it didn't give you a reward. So this is more like, when you talk about effort reward, this is time and reward. Time spent and no reward. All right, so all the time that was spent didn't give you no reward, and then it reverses. So that's the idea. All right, so there's a lot of time spent, there's a lot of effort, volume, whatever spent here, relatively speaking. And what did you get? You got a test and a reversal on good volume, good high volume up wave with 120, and it's ready to go. Takes out the highs, it's ready to go. You have to go long here. Just have to go long. All right, so the trigger is a little bit high up for me. I don't like it. Right here. That has the most, you see the first pullback, which is 2 bars. The reversal right after is the biggest activity in 50 bars. It's not going to fail. I mean, the chances of it failing are very little. You know, it might go halfway back in here, but you know, for my taste though, I prefer pull back near the lows, near the danger point. So it's a little bit risky in terms of the stop, because stop always goes below this low, not that low. If you put it below that low, then you can, you know, you can take it. You know, but because this market has a tendency to spring a lot, so in a lot of cases it's going to go up and then spring you and then go. Because I mean, look at the pullback from here to here. It didn't even pull back halfway. It pulled back about 30, 35. So, all right. So what are the key takeaways here? The key takeaways are: 1, how does the market turn? It turns typically in 3 ways. 1 is a climax, 2 is effort/dullness, and 3 is a lack of supply or a lack of demand. After that defines your left-hand side. So you always are on the watch for that. All right, that's the first thing. The second thing is, in downtrends, what can you expect after a change of behavior? What can you expect after a bullish change in behavior in a downtrend? The answer is you can expect a spring of the lows and then mark up. Why? That's what happens in downtrends. That's what happens. So, third thing to know is, what is high volume? High volume can be many things. 1 is a climax. You always are looking for climaxes. The second is a change of behavior. The third is effort. All right. Here, this, I'm not really sure what to call it, right? But I do know that it went into a upthrust position, and typically when it does that with high volume is because it's taking out stops. Because folks are using this consolidation to go short. So here, I'll show you right here. And this is so obvious. You see this low? You see this low? Right? That low took out the prior low, so it was used to bring in shorts. Here, everyone, you know, what were they doing? They're taking a look at this low and say, if it dips below that, I'm going short. So it dipped below it. People went short. Where's their stop? Above the pivot. What do you think happened? Took it out right above the pivot. How do you know this is manipulation? What is this high? This high is 368.81. All right, remember that, 81. 368.81. Right? 368.81. What is the stop run high? 368.82. Literally 1 penny higher. What is the purpose of the market going up by a penny after it took out the lows? The answer is really simple. When the market takes out the lows, you go short, your stop is above the high at 81. Where does the market go to? 82. Why? It's targeting the stops. Why is it targeting the stops? Because you have buys over here, so they can go up there and sell against the buys, establish sell positions. Those sell positions will serve as a form of distribution. Sell, 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 up thrust above the area and take it down for the last leg down for the week. So that's what's going on. So how are you to trade this? The worst thing you could do is, just say, okay, this is a low, below this I'm going short, above this I'm going to go long. That is the worst idea, unless you cannot do that, because that they're going to run this. There's a lot of additional verification that needs to be done if you're going to trade that. Break down, break out, right? You have to take a look at other things. And believe me, here there's a lot of activity. You see this, the 23? The market is breaking. There's, whatever market you're looking at, whatever approach, there's pressure here. There is definitely a lot of pressure here to break, right? But they're pretty slick and will reverse it and then go. So the idea here is to look at the upthrust came and then go short, and then this is the range is established. Look for the upthrust. Here, heavy activity, reversal short above the upthrust is the style and goes down. There's a breakout right here. The 18 and 31, they serve as breakouts. And you will see the amount of pressure. I mean, end of week or end of whatever is like pressure, or activity, whatever you want to call it. Activity, boom, boom, boom. 12, 18, 31. And light pull back, boom. Let's go. All right. So that's what happens. All right. So here, you just call it a stop run or an upthrust on heavy volume, followed by this massive wave down. This is pretty high volume too. This would be your, I guess you call it a climax right here. This is the biggest volume, 1, 2, 3, 4. Only 4. 1, 2, 3, 4. Okay, so it doesn't really. It just took out the 4 lows. It didn't hit the 5th. It has more volume than probably 4 lows. After that, you have a change of behavior. How do you know? High volume reversal. Pulls back, spring, climactic spring right here. I would also consider this effort reward though. Why? If you consider it the prior low here, how much reward do you get? You get nothing. It just puts it in a spring position. So it could qualify as effort reward. Anyway, don't want to get too bogged down into all of that terminology. The point here is effort and then there's reversal. Here, on the other hand, you can very clearly see the effort, the test, the reversal. Gotta get in. It's so easy to, this, but you need to get in on a pullback that's deep. If it's not, just forget it. And you see this happens again over here too. This was yesterday. The only problem is it gave a very small move. Anyway, this was yesterday. The market went up, there was a lot of effort, and it was a reversal. Okay, now take the short. What happened? Took the short, took out the lows. Right? Because you had effort. then you have this high volume down wave. So the high volume down wave is telling you that the effort is good. It serves as confirmation, as I've explained over and over again. So the short goes down, but the only problem is it only gave you one leg. Whatever, I mean, what are you going to do? You know, it's a very small trade. And after that, if you have the ability to see what's going on here, this final leg down didn't do that much damage, because you know why? This is actually effort reward also. Right here. You can consider it effort reward, or you can consider it climactic action. And this terminated the move, test, reversed. Effort reward has a tendency to get tested on a low volume test, just like climax. In fact, many times it's considered climactic just if you don't consider price and you only consider volume. Many times the effort reward is really a climax. If you only consider the volume and not the price, you know. Anyway, so you had this effort right here. You had this down wave, take the test, and it did not take out the highs, so it does not take out the stops. It goes down. You go down, you either go break even or you take some off. Then what happens? This is what happens. Again, I'll try to explain this really simply. You have high volume up and high volume down, short. High volume down and then high volume up, long. Why? Because this is a form of accumulation and distribution, like proving that it's accumulation distribution. Why? Because if you have high volume up and then the market breaks the lows on high volume down, that means somebody used the up wave to go short. They used the up wave to go short. Establishing or distribution. When you have down volume and then up volume, that typically means someone used the down wave to get long. And then they're using the rest of the up wave on high volume to go long as well. But at the same time, I need the proof, which is the break. And there is the proof. Here in this case, for example, you have this volume, and then you have this break. That's proof. Here you have this down, test, reversal. That's your proof. You know, otherwise you'll go crazy trying to figure out what's what. Here again, effort, boom, proof. Even with the COBs, what's the proof? The higher high. Up, down, up makes the higher high. Why did it go higher? Is because it needs more orders. It needs that liquidity or whatever you want to call it. And that's why it's going to go all the way down and try to find all the orders and accumulation and then reverse. And that's all, folks. Take care. Have a good weekend. Bye.